Hi, folks. This is Basil Chapman sitting in for Tommy O'Brien. It is my pleasure to have Tim Ord from the Ord Oracle on the line right now. Tim, how are you?
Good. Thanks for having me on. You have a good
Pleasure.
holiday?
Very good holiday, yeah. A little driving around to New York State and back from Boston, and it was fun. It was very nice. How are you?
Good. Well, let's take a look at the market, see what's going on. Market's
Sure.
down about 1%, whatever. This chart is the daily SPX tilt ratio. The bottom window is the SPX, and I talk about them every once in a while. But over the last week or so, if you notice up here, you can actually see it over here better. The SPX tilt, the divergence comes when the SPX tilt ratio makes a lower high as the SPX makes a higher high. So to don't have a divergence, both of them should make higher highs as the market goes up. Well, the market has been going up for looks like about mid August. It went up and hit a high last Thursday. We actually just got out of our position on Friday. We've seen the divergence, but anyhow, you can see here that tilt ratio made a lower high as the SPX, the SPX tilt ratio made a lower high, where the SPX made a higher high, and that's the negative divergence. And sometimes they can last along, so it doesn't really ring the bell at the top, but does give you warning that probably the rally is running out of steam.
Can I just, to clarify, so this is the ratio between the S&P and the TLT, which is the Lehman 20-year Treasury bond fund, right?
Right.
Yes.
It's basically the equity market compared to the bond market.
Right.
And TLT is just a tool that I use. So so you want basically in an up market, you want the equity market to lead the bond market. And when that stops happening, you got a divergence. And sometimes those divergences can last a while. The only thing it really gives you that you're probably going into a high. This next chart, you can see a little bit better. This is a tilt. You can kind of see where we hit a high back in mid-August, and as the S&P's made a higher high going into last week, you can see it was a little bit of lower high. So that's the negative divergence. What I want to point out, though, there was one on the VIX also. We had a small divergence in the VIX last week, where the S&P's made higher highs. You can see it right there, and the VIX made a lower high. Right. So I thought we might rally into the first week of September. That wasn't the case, so I was kind of waited on the sidelines a little bit too long. But what the pattern's probably forming here is let's see, this pattern. This is what I'm thinking is going on. The whole pattern that's been forming since what happened there? Okay. Let me get a different tool here. This one's kind of hard to see, but the pattern forming is probably a rising wedge pattern, and the pattern forming started back in last 1st of August and lasted till end of August. And I think we're probably going to go back down to around 620 area, probably a little bit lower on the SPYs. And the reason why I call this is probably a rising wedge, as the market moved higher, the volume kept going down. And this is, we had a kind of a steep decline right here where the volume really jumped up. And that usually leads into highs. I always found that once you get a big volume down, even though the market may move higher, you're probably topping out, and that's what happened here. So I don't think the rally or the decline is a one-day affair. I think we're actually going to go all the way down to 620 in that vicinity. And if you look at the see, is this chart? Yeah, the 620. If you draw a line across there, it's basically the February highs. This is the SPY. So I think we're going to go back down to the February highs. So we kind of chopped up. The summer doldrums are always kind of problematic because the volume drops out when the market goes up, and that's usually a bad sign. So I'm thinking we're heading to 620. And from there, we'll have to wait and see. I think it is going to be a decent bottom back in this range. And so far, if you notice the trend today, it's actually below 1. Last time we checked, it's like 0.72. So even though the market's off, a good percent or thereabouts, there's no panic in the trend yet. And you don't get a bottom until you start seeing panic in the trend. So today's not a bottom, even though you could maybe bounce for a day. It's not a worthwhile bottom to trade as far as the trend goes. So I think it may attempt to bounce, but in general, I think we're going to go down 16 or 610 on the SPY. I think that's where the panic's going to show up, and if it does, that's probably where the buy signal is going to be. And if the panic doesn't show up at 6100, then it'll probably go down until you start getting panic, so wherever that is. But most likely, I think it's going to be 6100. So it's not a top of long-term nature. You got September and October to get through before I think the market gets back on its feet and you rally to year end. So I think this month and next month could be choppy. I think it'll try to rally, come back down. So you got to pick your space. But I do think before the year is out, I think we'll see higher highs, higher than above the September highs. But I think you'll see 6100, 6200 first before those highs are seen. So we can take a look at the gold market.
Sure, yeah. What a market that is. You want to go to GDX right now?
Yeah, we got a minute or so here.
Okay.
Or unless you get some. Unless you get some comments or
the only comment I don't want to waste time. People are waiting to hear what you said. I just wanted to say that the VIX index, the trend index, I find different platforms sometimes give different figures. I often have a different figure on TradeStation than in say a Fidelity or others. But I just want to mention that in passing. But I'd love to hear your take on the GDX.
All right. Well, as far as the trend goes, I use on sink or swim. Yeah, sink or swim. And whatever you use, just stay with that trend.
Consistency, yes.
Yeah, because if you switch around, you'll
you get messed up.
You're right. I have talked about that too. But we're going to go in a break here. So this is actually good because we'll spend another next segment on the gold market.
Great. We're all looking forward to it, Tim. We'll be back with Tim Ord in a moment from the Ord Oracle. This is Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and my service here at TFNN has been for 21 years, 22 years. This is my Target Conditions Hour at 11 o'clock, and my newsletter, The Opening Call. I'll be back in a moment. The Dow's down 300. Hi folks, Basil Chapman sitting in for Tommy O'Brien. We've got Tim Ord on the line. Everyone's waiting. We've got the GDX. Tell us all about it, Tim.
All right. This is the monthly, top window is a monthly XAU. Next window down is a monthly XAU gold ratio. This goes back to, 1984. So it goes back far as I could go back. And I did was mark the times when it basically stayed in a trading range. This was 2 years. This was 4 years. This went sideways basically for 6 years, 2-year period there. But the ratio hasn't moved basically since 2014. So approximately 10, 11 years, it's been going sideways. And so I think it's probably about ready to do something other than trade between 0.05 to 0.08, looks like, thereabouts. And I think we're going to break out to the upside. And the reason why I say that is because we did actually get a sell signal here a couple of months ago or a couple of weeks ago. I don't know, fairly recent. We did get short. We covered the short, had a loss. And we'll get to that reason why I covered. But I'm thinking this ratio is actually going to start to break out of this trading range. And so top of the trading range looks like about 0.08, give or take. And I think we're going to break back there and actually go up to this up here, this 0.175. Because gold stocks really have been dead for the last 10 years. And this is one of the reasons why it just hadn't kept up pace. But anyhow, that's my view. I'll
Can
try
I just
to.
ask you, what's the little red dashed line right at the top?
Oh, that's the top of 2011 XAU.
Okay, that's just to mark the top. That's all.
Yeah, I just marked top.
Okay.
It shows, we're ahead of it. We're top of it now.
Very good.
If we're above there, there's a chance we could find support at that previous high. And if that's the case, then this would be more relevant because I think we'll start breaking out. But this is a shorter term view. This was my prediction. I don't know, earlier in the year, I had this chart and never updated it. But I had a chart going back up to this 0.085. I think we're at least going to get back up this area. This line right here is the top line of that right here. So that's the top of that trading range. So this area here is just blowing up, and this is what it looks like on a, this is a weekly. So I think we're going to go to 0.085. That means gold stocks are going to keep rallying here. So I don't think we're going to really back off from this, even though the RSI is up here about 70. I see a lot of gold stocks just starting to break out. Not the seniors. The seniors already broke out. I see a lot of the juniors are breaking out.
Like the silver stocks as well. Yeah.
Yeah. And they're breaking out with volume. So, if you start breaking above previous highs and higher volume, that implies the previous highs will act as support. So even though there'll be a consolidation, there'll be more or less a mild consolidation. And I pointed this out last time. This is the bottom window is the 18-day average of the advanced decline. It's on a daily basis up for GDX, just the stocks in GDX.
Okay.
And next window up is up-down volume for stocks in GDX. So this measures the up-down volume and advanced decline. So when their stock's extremely strong, this ratio gets above 40. And when it does, I mark the times in red. When it does, we just had above 40 last week. One got to 44, and the other one, I think it was 39.48, close enough. A lot of times, this is the only failure right here, but the other 4 times, either the market went up for another 6 months, this one went up another 3 months, this one went up another, I don't know, looks like 4 months. This one, no, that was 6 months, and this one was like 4 months. And this one kind of just failed. It didn't really go down much, kind of build a base before it took off. And we're happening again right now. What that means is the previous 5 times we got to 0.4, and both those indicators were 5 times but 1 failure. And the failure wasn't really a big failure, it just kind of went sideways. So there's an 80% chance that the market's going into a surge pattern that may last 3 to 6 months. And I think that's what we're going into. I don't see a top of gold of any consequence. Matter of fact, we just broke out of a consolidation phase. So I think there's more room to the upside in gold stocks. So am I long GDX? No, I got to find a spot to get in. And right now I don't have one. So I'm neutral. Actually, I'm bullish on GDX. I'm just not long. But I think there could be a mild consolidation at some point. I'll probably get long. If there's no really consolidation, I'll have to just stick it out. But I do own a lot of gold stocks, and all of them are doing extremely well. So I don't think there's any top of any consequence here. I think, how high it's high, I don't know. But I think the GDX GLD ratio is going to break out to the upside above 0.085 at some point. Is it this time around? I think there's a good chance that could happen, because that ratio getting back to this pattern right here is very seldom you go that long without, in a trading range, without either breaking out to the upside or breaking out to the downside. Can it break out to the downside?
This is one of the longest times, right?
This is the longest time. Yeah, well, I haven't updated the chart. It's actually 11 years now. But either it breaks down, which gold stocks will be extremely cheap compared to gold, or it breaks up. I think we go back to 0.75. So I think the gold stocks, matter of fact, I do have another ratio. I didn't bring it with me today, but it's the ratio of GDX compared to QQQ. And that ratio has been going down for quite a number of years. And I think it's about ready to turn back up also, and that will imply that the GDX will outperform the QQQ. So I think there's a big change coming. And so I think we're in the midst of it right now. And if things change, I'll change with it. I'll eat crow and say, nope, this is not right. We're not going to keep going. But I do think there's quite a bit of evidence with this big base and the GDX or the XAU gold ratio going sideways for so long. It needs to either go up or break out to the upside or break down to the downside. And I just think it's just too cheap, but I think we'll find resistance there. But to get to 0.175 compared to where we are right now, without gold moving at all, that would mean over a double in gold stocks just to get to that ratio.
Oh, okay.
So it's where are we right now? We're 0.072. So if you double 0.072, you come up with around 14 and change. So to double this ratio without gold moving, that means gold stocks GDX would double without gold moving at all.
Wow, that's quite something. Yes.
Yeah, so gold GDX would go to 120 or something like that, thereabouts, because it's approximately around 60 right now. So anyhow, we'll see what happens. If things change, always look at the bigger picture first to see what's coming up. And I think
Tim, before we go, could you just quickly say how people can reach you?
Ord-oracle.com is my website.
That's great. So thank you so much for being here, and we will see you again on Thursday, well into the week.
All right. Thank you.
Thank you, Tim. That was Tim Ord, folks. This is Basil Chapman sitting in for Tommy O'Brien. Dow's come back a little bit, down 280, and the S&P is now only down 48. Not bad action for a day like